KYC, etc., enable us to set up micro accounts very quickly, because the cost of authentication, instead of being 2,000 or 3,000 rupees, becomes 20, 30, 40 rupees. Once we can do that, then of course a whole host of new products become very easy to be able to bring to people. This is what is happening through technology. This is what is happening through our policy initiatives. And then finally, we have been introducing, in partnership, working together, without tension, obviously in a very collaborative way, with various financial institutions, an array of new products that are tailored to the base of the pyramid, whether it is the Jeevan Jyoti Bima, Suraksha Bima Yojana, obviously Jan Dhan as a no balance, no frills account, and so on. So by opening up these kinds of very, very standardized, simple products, similarly for Mudra as well, where we've got Shishir, Tarun, Kishore, and so on, an array of these products really opens up the market to get to the base of the pyramid. And this is how we have been partnering with our financial institutions to serve the needs of India as well. And that's been really the thrust of our policy making. So that concludes the first of my 3 points, which is what have we been doing as far as policy making is concerned to try and close this gap. Now, let me turn to what is the role of government in all of this. Government itself has, I think, 3 very important roles to play as we define the objectives and try to close the gap between what has been done so far and what we need to achieve. Government, of course, has to play the regulator's role, and we do that through our regulatory institutions. And even as our regulators get more and more capable of handling most of the day-to-day regulatory issues, there are still gaps and conflicts between what they have to do. And so part of the role for us in Delhi as the people's representative is to understand where those gaps are, where those issues are between the various regulators, and work together. And we have a various set of mechanisms like the Financial Stability Council, where we work on issues like KYC, we work on issues like retirement, which overlap between what insurance and what PFRDA and so on does. So we have to work together to ensure that there are no regulatory gaps, no stability and risk issues coming up across the various different regulators. We also have to ensure that markets work smoothly, and of course there we are in constant touch with the various regulators, in this case largely SEBI, to ensure that capital markets are working smoothly and efficiently, that there isn't any friction that's being caused and a non-level playing field being created because, for instance, through tax policies we end up advantaging certain instruments and not other instruments. That becomes a very important role for us to play. And then finally, and we've been working very, very closely over the last year, very closely, is with RBI with respect to the banking sector, particularly on NPAs, which of course we understood to be a major area of focus for our government. And I'll touch on that now, because if you see what is consuming most of the media noise and most of the headlines right now, what a lot of people are discussing is obviously the issue of NPAs as well. And there we have been working with RBI and with the financial institutions to prevent anything systemic, to be able to deal with this set of issues across a variety of fronts. And those are, number one, looking at various sectors to understand where the sector stress is. So whether it's steel, sugar, textiles, power, in all of those areas we're trying to relieve sectoral stress, even as we are looking at where the NPA exposure is. So we are working on that. Number two, we are obviously trying to develop the resolution processes, both short-term and long-term, so that in fact, if there is a set of assets that are not performing as well as they should, they're heading towards NPA status, how do we resolve them working with the financial institutions and the promoters? And there, of course, working with RBI, we've created a number of shorter-term measures, I would say, the JLFs, the CDRs, the SDR process. But longer term, obviously, we are working on the bankruptcy code so that in the future there is a smooth and effective resolution of these kinds of situations, and that can be done in a very well-structured and a very efficient fashion. So resolution is another front that we're working on to be able to deal with the stress that we are seeing across the banking system. And then finally, of course, we as government are working to ensure that all of our banks are able to meet their capital requirements, their capital adequacy norms. And to that end, we've been working again very closely with RBI to ensure that we are north of all Basel III requirements, north of what RBI would like, between some of the measures that we can undertake in terms of capital injection and what the RBI can undertake in terms of certain types of relief or certain types of measures in which they can release some more capital in the system. So the second role of government, therefore, is to ensure the banking system and financial institutions are not facing any systemic risks because of underlying stress in the economy, that NPA resolution is being able to done efficiently, and then finally, whatever capital is required for the financial institutions, that is available to them so that they are north of any capital requirements that they might have. I'll now come to my final point around what the role of government should be as a shareholder, as a trustee of the people's wealth, because obviously if we have stakes in financial institutions, which we do, we have that as a responsibility to the people of this country. And if we are representing the people of this country as a trustee, as a steward, then we really need to work to ensure that our financial institutions have the right governance and the right management to be successful so that they can be competitive in the long run. And we have been, of course, working through that for the last year. We've completely restructured the way in which people are appointed to the boards of these financial institutions, as well as the manner in which people are selected to run these institutions. We've separated the role of the chairman and the MD, and we've really tried to strengthen governance and management. The two Jayant Sangam events that we've had, the first one, which was in January 2015, and that was attended by the Honorable Prime Minister himself. Those have been attempts to bring the entire financial sector together to ensure if there are capability gaps or issues where we need coordinated action, that we can do that. So that is a number one role, which is governance and management to strengthen these institutions. The second is obviously to build up talent and capabilities, particularly around risk management and project finance and some of the other areas that the banks need to build up. And so we've been working with the banks through the Jayant Sangam and the Indian Banking Association and the quarterly review to build up talent and capabilities. In particular, risk is an area where it's very important for our banks, and you saw that from some of the events that have come to light recently, that we really need to ensure that all of our banks have absolutely world-class surveillance mechanisms and risk controls so that they can deal with cases of financial fraud and financial wrongdoing, which are increasingly becoming more and more prevalent around the world. So risk becomes very important. And then finally, we have to work as a trustee with our banks on value creation. And value creation will come in two ways. One, by having differentiated winning strategies for our financial institutions, so that they all are not following the same strategy. They have differentiated winning strategies as this whole landscape evolves very quickly. And then the second, as we've stated in the budget, is to ensure that particularly our banks, have sufficient scale to be globally competitive. Sufficient scale to be globally competitive and to be able to be partners to our industries, to our companies, as they also expand globally. So we need to have sufficient scale, which obviously means that we have to start to consider how consolidation can happen across our financial institutions as well. And that is another thing that we, as the People's Trustee, have initiated. Now, I'll step back and say that all of this that I'm talking about, the role of Delhi, the role of the policymaker as the People's Trustee, as the major shareholder in these institutions, we think is going to be massively transformed and massively improved by the Bank Board Bureau. As you know, we've had a series of meetings recently with the Bank Board Bureau. We are very fortunate and privileged to have an extraordinary group of individuals who are under the leadership of Shri Vinod Raiji, are going to be at the Bank Board Bureau, and we are working very closely with the Bank Board Bureau on all of these aspects of strengthening and making our financial institutions much more competitive in the future. And so, I'll conclude by saying, ladies and gentlemen, that as we work on these policies, as we work on regulation, as we work on the NPAs, and as we work on strengthening our financial institutions. The gaps, the challenges, the issues that we confronted when we assumed office in May 2014 are rapidly being closed. And I see our financial sector, including our public institutions, as being very robust, very competitive, and very capable of powering India's growth going forward, financing India's growth going forward. And we in Delhi look forward to cooperating, collaborating with all of you in India's financial capital to make this happen. Thank you very, very much.
Thank you so very much for that highly inspiring speech. And now, the vote of thanks will be proposed by Mr. Mahesh Thakkar, Co-Chairman, Banking and Finance Committee, IMC.
Thank you. Good afternoon, friends. Our Chief Guest, Mr. Jayant Sinha, Honorable Union Minister of State for Finance, Guest of Honor, Ms. Arundhati Bhattacharya, Chairman, State Bank of India, CA Mr. Devaraja Reddy, President, Institute of Chartered Accountants of India, Mr. Dilip Piramal, President, Indian Merchants Chamber, and Chandan Bhattacharya, the Chairman, Banking and Finance Committee, Arvind Pradhan, Jitendra Sanghvi, ladies and gentlemen. I have a pleasant task of performing vote of thanks at this inaugural session of IMC's flagship seminar on changing contours of banking and India's growth aspirations, Banking and Finance Conference. Sir, this is the 8th conference in a row, and every year it grows in size and stature, and is the most awaited conference in this financial capital of India among the banking and the financial fraternity. Sir, you covered all the aspects of the role of government, not only as a regulator, but also as a developer of the financial sector. You covered the financial inclusion, which has been the buzzword today. We covered the financial sector reforms, the ongoing and unfinished agenda, as well as the government's role in encompassing that. We are very thankful to you for making yourself present here at this August gathering and giving your views on the financial sector reforms, out of your sparing your valuable time and giving us the insight into the government's policies and reforms. Thank you very much, sir. Thanks also due to the State Bank of India chairperson, Ms. Arundhati Bhattacharya. Madam, State Bank has always been patronizing this conference, and we are always thankful to you. And you covered all aspects of banking sector, particularly public sector, banks and its roles and responsibilities, and how it's been taking up in these tough times. Thank you again for making yourself present at this hour and agreeing for being a guest of honor to all of us. Friends, our thanks also due to our partner, Institute of Chartered Accountants of India, all the speakers and faculties. We already had 2 sessions and 2 more are coming on, SME funding as well as the digital banking. I thank IMC trustees, past presidents, and the managing committee members who are present in large numbers. IMC Banking and Finance Committee members, without whose support this conference would not have made out with this success, or the delegates who are registered from the banking sector, sponsors, our knowledge partner E&Y, State Bank of India, Bank of Baroda, Union Bank, Exim Bank, Punjab National Bank, Dena Bank, and of course the prospect for the kit sponsors. Friends, my thanks also due to the IMC staff, particularly Arvind Pradhan, Jitendra Sanghvi, Sanjay Mehta, Bharti, and all others who have done the unstated work for this success of this seminar. Press and media being present in the large numbers, IAS students who have done the wonderful work of managing the whole affair, Trident Hotel Management and staff, and of course, Mansi the Compare. Thank you very much all. We all want you to continue to attend this 2 further seminars, and thanks again to the guest of honor as well as the chief guest. Thank you very much.
Thank you, Mr. Thakkar. Ladies and gentlemen, with that we come to an end of this inaugural session. But please remain seated as we begin the next session immediately. Kindly note that there is no break.